Welcome back everybody, your typical bull here, and today we're going to go over the level 1 and the level 2 box, what all these friggin' numbers mean, and by the end of this video you will understand kind of how all of this works. But before we get into it, please do remember to like, subscribe, and comment. And if you really want to support the channel, we have a Patreon page and there's a membership program through YouTube. You should just be able to click the join button on the top right hand of the screen there, and that's going to cost $4.99 a month. So with that being said, let's get right into it. So this is a level 2 box, and this is a level 1 box as printed on Webull. So this may be different for different brokers, but the information in them should be the same. So the level 1 box shows the ticker's name, the ticker's last traded price, the change on the day, so this is change 0.0 and 0.0%. It shows the opening price, which is 811. It shows the high price, which is also 811. It shows the low price of 794. It's going to show any after hours changes as well. So in this case we've lost 4 cents or 0.5%. It's going to show the volume, and this one's closed, so it's going to be 3.98 volume on the day, but if it's during the day it's going to show you the amount of volume that has been traded up to that point on the day. And then of course you have the previous close here, which would be 806, and the market cap. So the level 2 box is going to be the other picture we were looking at above there. At the very top you're going to see the best bids to the left and the best offers to the right, as well as the size of those bids and offers. The bid is the current best price people buy at. The offer is the current best price people are willing to sell at. These will always be ordered so that the best price is at the top of its respective list, and the lower bids and offers are going to be below those. So the prices below those are also called the underlying bids, and respectively the offers under the current best offer are called the underlying offers. So let's go look at that. So over here on the left you're going to see this number at the very top. It's $7.10. That's going to be your current best bid. So currently somebody wants to buy 2,020 shares at $7.10. And then over here to the right you're going to see $12.32 is the best offer. So somebody wants to currently sell 1,000 shares at $12.32. So our underlying bids here are going to be those below this. So we have 25 shares at $7.03, 75 shares at $7.01, 50 shares at $7, and then the next, of course, largest bids, the very bottom, is going to be 3,500 shares at $3.44. Then below here we have the 1550 offer for 2,500 shares. That's a pretty significant offer considering the rest of these volumes are fairly low. Of course, this is an after hours level 2 box, so it's going to be way different when the market opens. So the underlying offers are below the best bid and the best ask. So we've kind of went over this here already, the current bids and asks and kind of what that means. And the distance between the current bid and the current best offer is also going to be known as the spread. That's what we call the spread. So the distance between the current bid here at 710 and the current offer here at 1232 is actually what we call the price spread, or just the spread. So in this case it is the after hours market, so it's going to be a very wide spread generally. Oftentimes you'll see these as little as a penny, especially for your more liquid stocks. Alright. You should definitely be watching these underlying bids and offers when you're looking to get into a position. This will help you to better gauge your risks. So the number of bids that underlie your long entry will tell you how easy it would be for you to exit should you be stopped out of a position, right? See, if you are in something that's very thinly traded and there's not really any bids, and you try to stop out and there's nobody willing to buy your position that you're stopping out of, you're not going to get filled, or you'll get filled at a price that's way lower than what you were expecting. This is where you get your big slippage orders, right? So with your very high liquid stocks like your Apples and your Facebooks and stuff, this is generally not going to be an issue. So but you just do need to pay attention to this for your like more thinly traded stuff. So the alternate's going to be true if you were on the short side of a trade. You need to know how many offers there are so that you can cover your position if you need to buy on the ask. So you can also kind of figure out a stock's strength or weakness by analyzing the underlying bids. If there's a large amount of underlying bids with a large amount of size, this could mean that the stock will trade higher very soon. So keep in mind that this is relative to the current stock you're trading. The numbers must be significantly different than the other bids and offers to make a difference. So if you're trading a stock that has an offer of 100, 200, 150, 200, then all of a sudden an offer of 5,000 prints, that's going to make a difference because that's a very significant number that's much larger than its current volume. So that number is going to make a difference. Now, on the other hand, if you're trading something that's 700 shares, 1,000 shares, 800 shares, 1,000 shares, 2,000 shares, a 2,500 share print is not going to make that much of a difference because it's not very out of the ordinary. That's just a normal order for that ticker. So this is what I mean when these are relative, right? So that same scenario, if something prints the 1,000 shares and then all of a sudden it prints 50,000 shares, that's a significant offer. So that's what I'm talking about. So up next is the time and sales box. This is what we call the prints. This is where you're going to see the prints. So the prints are the actual filled orders. It's going to tell you the price the order was filled at and what size it was filled at. A print that is green shows a trade that was made on the offer. So a print that's red shows a trade that is made on the bid. And white prints are trades that are filled somewhere between the two. These are called inside market trades. So a very common mistake that a lot of people make is thinking that a red print means selling and a green print means buying. So keep in mind that for every buyer there's a seller, and for every seller there has to be a buyer. So this just isn't true. That's not how it works. So the green prints are prints that fill on the offer, and the red prints are prints that fill on the bid. So let's go up here and look at this. See here, you can see that there was one share traded at 1603 at $8.02. And this is an inside market order. Here's 948 shares traded at 806. It's an inside market order. And then once again here we have $8.07 for 100 shares that was traded on the offer. See, this is green, so it was traded on the offer. I'm going to show you what one traded on the bid would look like. If I can scroll back far enough to find one. Let me just actually click on ears here. There's definitely, okay, so here's what we're looking at. So this is going to be 200 shares at 304.5 traded on the bid here. So these 200 shares were traded on the bid side, and then next to that you have these 71 shares that are traded on the offer side. It can be a little confusing at first. Just remember that green is on the offer and bid is on, and red is on the bid. Okay, so let's go back to what we were looking at here. So by now you should pretty well understand the information that's printed in both the level 1 and the level 2 boxes. You should know how to locate the best bids and offers and determine the size and prices that those are offered or bid at. So you should be able to do the same for the underlying offers. You should know what the prints on the bid and the offer look like and what that means, as well as the inside market prints. If you don't understand, you need to review this information until you do understand, because it is very critical that you understand this when we move into the more advanced content from here. So with that being said, that's going to pretty well cover it for this video. Once again, I would really appreciate it if you click the subscribe button, leave your comments below and questions, tell me what you think about the video, and if you're really feeling generous and want to get my midweek watch list updates, then you can subscribe to the channel through the YouTube membership program. That's $4.99 a month, or you can subscribe to the Patreon. And there are different tiers of the Patreon. And anyway, that's going to pretty well cover it. I will see all of you in the next one. Cheers.